welcome. You're watching Ask PQ on Bloomberg Quint. I am Agam Vakil and with me is Alex Matthew. Good afternoon, Alex.
Good afternoon, Agam. Well, this is the show that gets you answers to all your questions about equity. You can send those questions to us on Twitter, Facebook and WhatsApp. You can also call us on 022-454-04141 or you can mail us on askpq@bloombergquint.com. Only make sure to add the AskPQ hashtag. We'll be back on YouTube in just a short while. But Agam, it's all about that number, that big number, the Sensex hitting a lifetime high.
Yes, absolutely. I'm sure a lot of investors out there invested in those 30 stocks on the Sensex will be very excited considering it is at a lifetime high into uncharted territory with Sensex currently up 1% and at 38,962 to be precise. Well, everyone is waiting on the Nifty to catch up and move above those levels. But clearly, there is that gush which we are seeing and that momentum building up in the large caps, which is actually pushing these indices higher, and Nifty 50 perhaps the only reason why we are seeing a little bit of a lag here is because of some of your relatively smaller market cap names are yet to catch up with the bigger names. That said, we're still looking at gains for both the Nifty as well as the Sensex, the banking index as well, trending higher by as much as about 0.25%. And again, this one is also trading at life highs. It actually moved into life high territories, uncharted territories last Friday. So, building on those gains coming through. Let's take a look at your broader markets too. And Nifty in mid cap and the small cap indices advancing, in fact, outperforming the benchmark indices. The small cap index is now starting to pick up and up 1.5%. But to take a look at what it is that's driving the Nifty and the Sensex higher at this point in time in terms of the gainers and losers, let's take a look at the gainers first. And we have metal stocks which are advancing. Hindalco up 6%, followed by Vedanta also up 4.3%. But in the auto pack, it's Tata Motors, which is, driving the auto sector as a whole in general. But Tata Steel is not too far behind. That's also up with as much as 3.9%, followed by GAIL and Wipro. So these are just some of the stocks which are aiding the indices, pushing them higher. But are there any stocks which are also losing out at this point? Indian Oil Corp looking at a little bit of profit taking, but do remember it's been a very, very strong past couple of weeks for Indian Oil Corp. IndusInd Bank also down by as much as 2%. And UPL was some of the traders' favorites on the losing end today. But we'll continue to keep an eye on some of them. The positive, of course, and the overall takeaway is that Sensex trades in, at a lifetime high.
All right. On that note, let's get our two experts in for the day. We've got Amar Singh of Angel Broking and Parthiv Shah of TRACOM Stock Brokers, who are here to answer all of your questions. Welcome to the show, gentlemen. I just want to start on top of the show with the technical view. Amar, we've hit lifetime highs on the Sensex and the run-up continues on the benchmarks. Are there levels that you think are crucial to watch out for so that perhaps somebody who's looking for shorter-term gains does not get their fingers burnt?
I would say that looking technically on the charts, clearly the momentum definitely remains intact. There's no doubt about it. And looking at the weekly charts also, if I look at the weekly charts, what we see is that in the last week of August, if you look at Nifty made a high of 11,760. So that top is yet to be breached on the Nifty. So, but the momentum on the weekly charts clearly shows that that's very likely to be exceeded. So, what you'll have to watch out for that, because the market is going to at least take a breather around 11,750, 760 level, because that being a crucial top for that. But the momentum clearly indicates that that is likely to be taken out. On the downside, what we're seeing is that somewhere now the base of support earlier, which was around 11,300 levels, now that has shifted higher towards 11,450, 11,500 zone. And also, if you look at the last few days, almost from 20th March, we did witness a correction for 3 days. Again, there was a sharp pullback. And today also the market is sustaining. So I would say that one needs to be, yes, slightly cautious, because the previous top or the all-time top is still to be breached in Nifty. And given the broad-based rally and overall the trend indicating, I would say that there is a possibility that that is likely to be taken out. On the downside, 11,450, 500, that's a very crucial support zone. So anyone buying on any dip should ideally have a stop loss below 11,450, and if it reaches 11,750, 760, then it's definitely headed higher towards 11,850 levels.
Okay, well, on that note, we address a concept perhaps here. Parthiv, good afternoon. We have a lot of questions now when it comes to investing in holding companies. In this specific case, we have a question from Mayank Saraf, who wants a view on Kalyani Investments, which is the holding company of Bharat Forge, which is up 15%, and he wants to know if it is worth investing in something like Kalyani Investments, considering it is going at an around 80 to 85% discount to Bharat Forge. I reckon this is to do with, your valuations. But Parthiv, even otherwise, we've had a lot of questions on Bajaj Holding, where we've seen a surge in Bajaj Finance and Bajaj Finserv, and every now and then we get that spike in Bajaj Holding too. So if you could actually address perhaps the merit or in investing in a holding company, and perhaps specifically to do with Kalyani Investments as well.
See, very frankly speaking, we are not big fans of investing in holding companies, and I think this is despite the fact that most of the plethora of holding companies that we have in our stock markets, I think they always tend to quote at a holding company discount from anywhere ranging from 50-60% to as high as 80%. And I think these ranges, I think never ever we have seen that the holding company trades at the net asset value of all the holdings that it has. Not even we have seen like these holding companies tend to quote at a discount of 10, 20, 30%, because the only way that investors can make money in these holding companies is that the holdco discount goes down, and also all the shares that it holds appreciate. So I think it makes it very, very difficult to have these companies in the portfolio. And despite Kalyani Investments, I think yes, absolutely true. I think the holdco discount is anywhere between 75 to 80%, but that has been the case with this company ever since I think it has demerged. And this company, I think the shareholders have been facing this particular holdco discount, and I don't see a reason why this discount will narrow down or somebody would, because most of the smart money or the institutional investors don't tend to prefer investing in these holdco companies. They tend to prefer to invest into real businesses which are cash flow generative, which give dividends. So I think it's better to avoid these holding companies and focus on the core companies that these holding companies owns.
Yeah, because from a sense of actually looking at it, that is the business that you're buying at the end of the day in any case. All right, we've got another question for you, Parthiv. This is similar to the question that we started with, in the sense that we've seen a huge run up in the benchmarks. The mid caps seem to be picking up as well. The small caps are buzzing today. We've got Raveen Pai, who's commenting about the kind of FIF flows that you've had in the recent past, and he's really questioning whether it is in fact hot money and that it will get pulled out. So he's asking, he's got a few stocks that he's identified. TCS, Yes Bank are the two companies that he's talking about. Is this the right time to invest, or do you think that he should wait for some time?
See, firstly, the case about the FII money, it's not that they are parking in money only in our country. It's a trend that we are seeing, that they are having a lot of capital inflow in most of the emerging market stock markets. And the key reason being, it's not like because we have elections and probably the FIs have predicted the election result. The technical reason is mainly because of the change in the Fed stance and the Fed commentary. Instead of hiking, now they're probably talking about a status quo, and rather there are some talk about, if the US economy were to slow down more than envisaged, they might even talk about a cut. So I think that's a key reason why we are seeing the flight of capital moving from the developed markets, where I think since around 2-3 years, we a lot of capital move away from the emerging markets to the developed markets. And I think now reversal is taking place. And it's long overdue rather, because FIs have been sellers in our market since many years. So I don't think that this money is going to be here for a very short time. It's going to be very sticky. It's a long-term business coming into the ETF money. Talking, I think, primarily about the companies that I spoke, these are certainly, I think, the ones where I always targeted. The highest alpha generation could take stock. Yes, but
I believe we're having a bit of a problem with that connection. We'll try and reconnect to Parthiv. In the meanwhile, let's address the numbers that are flashing on your screen. We've just got Ashok Leyland's numbers coming in for the month of March. As you can see, the sales are down about 4% at 21,535. Just about higher in trade, about 0.6% higher in trade today.
Yeah.
A lot of people watching out for those numbers to see whether there's a trend indicating.
So for the month gone by, they're largely in line with what brokerages were expecting, and I think the Bloomberg Quint poll was somewhere around 21,000 mark. So these numbers are not a surprise. And I reckon that to a certain extent, considering a lot of players out there in the markets already carry out their market check, is the reason why this particular stock has not been moving too much. And of course, we all know that Ashok Leyland has, gained after losing quite substantially. So we did have a very tough month for Ashok Leyland, perhaps in January, where it did move down to levels of, below the mark of 80 at one point in time. And since then, it has made a little bit of a recovery. Okay, so as you can see there. And of course, now eventually, currently at around 91, 92, well, the March sales are down 4%. Our expectations were a decline of 5%. So, on that note, I think we also have a query on Ashok Leyland. Yeah. We have one from Kavya, and Kavya has bought Ashok Leyland as well as Avanti Feeds. That's the other question Kavya wants to know. I believe we have Parthiv back with us. Parthiv, how would you address Ashok Leyland right now? Would you want to perhaps initiate any long positions here? And what is your assessment of Avanti Feeds as well, as we stand?
Okay, Ashok Leyland, I think our sense that not only these months, but I think the upcoming couple of months, the sales could be tepid for these medium and heavyweight commercial vehicles players, especially Ashok Leyland. And actually, no doubt they've improved their balance sheet a lot since the last crisis or the last cycle, which gives us a lot of comfort that for the long horizon, this company can extremely well. The key question is when sales being tepid, even the current trade.
Parthiv, let me stop you there. Parthiv, so sorry, but we can't really make out what you're saying. The line is a little bad. We'll try and reconnect. In the meanwhile, let's take a technical check of these two counters. We've got Ashok Leyland and we've got Avanti Feeds. Ashok Leyland, where numbers have just come out, we've indicated the sales have fallen about 4% on a year-on-year basis to about 21,535, and that is in line, as we told you. The stock is currently up about 0.6%. For the last month or so, it's gained about 1.4%. Amar, you're with us on the phone line. I understand. How are you looking at these two counters? Should there, or what are the levels that you would watch in the near to medium term?
I would say that looking at Ashok Leyland, technically it's looking positive, I would say, on the short term as well as the intermediate term trend. And the recent high which Ashok Leyland had made of 95.50 in second week of March, so somewhere or the other that could be a resistance level, and technically that's the level where it could meet with some resistance. On the downside, it seems to have formed good support around 85 zone, 85, 84 zone. So it looks like that Ashok Leyland is likely to trade 84, 85 on the downside, 95, 96 on the upside, but I would say that any dip can be used as a buying opportunity, but on the upside one needs to understand that 95, 96 would be a key resistance level.
All right, and if we can also take your view on Avanti Feeds, Amar, because this is another stock which has seen a lot of volatility of late. Of course, it's advancing by around 2.5% today, currently at 417. What is your assessment of Avanti Feeds?
I would say that Avanti Feeds is currently around its crucial resistance zone, because if you look at it technically on the long-term chart, anywhere between 425, 435, 440, that's the crucial resistance zone, and that is being clearly reflected on the short-term as well as the intermediate-term trend. And also, if you look at the weekly charts, 438, which was the high that was made in the last week, so that is also a resistance level. And on the daily charts, it's indicating that it could be in for some consolidation, 440, 450 on the upside. That seems to be capped right now. On the downside, around, I would say, somewhere has got good support around 380. So 380 on the downside and 440 on the upside. That's the range that Avanti Feeds is currently into. Okay,
we've got a couple of more questions for you, Amar, on the on the charts. We've got Radish Shah who's asking for a technical view on Dwarkesh Sugar and Ipca Labs for the next 2 to 3 months. Let's pull up these two counters. First, Dwarkesh Sugar, and see where it's currently trading. It's just about, less than 0.2% higher, 30.8 or thereabouts. Volume about 730,000. What's the view here, Amar, on Dwarkesh Sugar?
Yeah, overall, Dwarkesh, if you look at the different time frames on the daily, weekly, or the monthly, the trend definitely remains positive for this stock. But what we're seeing in the stock is that in the last in the second week of October 2018, it had made a high of 34.5. Recently also, in the first week of March, it made a high of 33. So clearly showing that 33, 34 is a very strong resistance zone for this stock, and only a breach above that level could lead to a meaningful rally towards 44, 45 levels. And on the downside, what we're seeing is that the stock has got very strong support coming around 27. So 27 and 34, these are crucial levels to watch out for. Only taking out 34 could lead to some significant rally, or the stock could witness some topping out around those levels, 33, 34 levels.
Okay, what about Ipca Labs? We've got Ipca Labs as well. The question from Radish Shah, he's asking for a view for the next 2 to 3 months. The stock is currently at 984, also just about 0.3% higher in trade today.
I would say that Ipca Labs technically continues to remain extremely strong on the charts all across different time frames. And also, if you look at the stock from a very long-term perspective, taking out the 900 level only itself, which was our earlier top in 2014, taking that out, the stock has rallied almost 10% from those levels. But what we are seeing on the daily charts, that a shooting star formation is there on the daily charts. So that clearly reflects that the top seems to have been made, 1046, the high that was made. So that is going to be a very crucial level for the stock. And so I would suggest that those who are long in this stock, they should definitely look at booking some profits, because reaching 1050 is not going to be easy for the stock, and we could witness profit booking around those levels. On the downside, if I look at somewhere around 940 is a very strong support zone, because that's the previous short-term top which it had made. So 940, 945, that's the support zone. Upside, I would say, as I spoke earlier, 1046, which was the high that was made. So I would suggest profit booking into this particular stock.
Okay, Amar, we have a question on Jet Airways as well. If you can come in on this one. We have a question from Bibin, and his question is if it is the right time to invest in Jet Airways. Ideally, I would like to take a technical as well as a fundamental view on this one. So I'm going to come to you first on your technical view of Jet Airways. I believe it has seen some sort of consolidation over the previous 1 or 2 months, but how would you go about it from here on?
I would say, see, what we are seeing in Jet Airways is that the way Jet Airways have cracked from almost 900 levels to as low as 162. So it's bounced back, but overall it seems to be, if you look at last quarter's high, so somewhere around 313 countries, around 268, 270. There is a possibility that the stock could rally higher, but upsides are likely to be met with very strong resistance. So the first resistance, technical resistance zone for Jet Airways, comes around 285, 290. And taking that out only could mean some rally towards 300, 310 levels. But otherwise, I would say that the higher upside is on the, we have got resistance. On the downside, for support levels, around immediate level of support is somewhere around 245, 250 for Jet Airways. Short-term and intermediate-term trend remains positive for this stock.
Right. So with that, let's also take a fundamental view of Jet Airways. I believe we have Parthiv Shah back with us. So Parthiv, firstly, would you at all advise going into something like a Jet Airways, and if at all, would current levels be a good idea, area to enter into Jet Airways?
See, I think you'll be knowing that ever since we talked about the aviation sector, we've always been advocating interglobe aviation, even at levels of 850, 900, when I think the results were not coming in good. I think we're still stuck to interglobe aviation. And the reason being that, I think Jet Airways, no doubt, right now, I think probably there's a lot of consensus building on Jet Airways that will be a turnaround story. The new management, whosoever or wherever it comes, I think will be able to change the way the airline is operating. But I think it's going to take a long time, because I think the biggest concern with Jet Airways is non-fuel costs. They are extremely high, and I think it becomes very, very difficult to change that element of the cost structure of any airlines. So probably I think we are not really sure whether it will turn around or not, or even at the current trail valuations. I think looking at the problems Jet Airways has, I think valuation-wise SpiceJet and Interglobe Aviation are still a lot better placed. So I think I would, if not Interglobe Aviation, then I think I would still risk in SpiceJet as compared to going with Jet Airways at current juncture.
And that is assuming that Parthiv, Jet Airways goes through the resolution process, that the bankers find a buyer for Jet Airways, and if they don't, it of course has to go into insolvency. But let's go to another counter right now, not doing particularly well and hasn't been doing particularly well. HTIL, we've got Nishtha Dhingra, who's bought JK paper at 95, and HTIL, which is trading at 26 or thereabouts. She bought it at levels of 65. What advice would you have for her, Parthiv?
See, I think HTIL, we know it's a tainted real estate stock, and I think real estate, no doubt, as a sector, what I feel is that over the next 3 to 5 years can be a sunrise sector, but one will have to really cherry pick the right kind of stocks, the right kind of management. If one wants to take slight risk, then probably the story in DLF, which is building up, seems to be quite good. After the QIP, I think the balance sheet has become a lot more leaner, and I think it's now they have to just try and get rid of the inventory, which will help them to further improve the cash flows. But if one wants to play it relatively safe, then I think the best names again would be the usual suspects, which is Godrej Properties and Mahindra Life Spaces. I think these are the two real estate stocks that we feel one can stay invested into over the next 3 to 5 years.
All right. Okay. Moving on to another fundamental query, because since we have a lot, we have a question from Akshay, and it's on Bata India. Is this a right price to buy Bata India? That's the question. And we all know that Bata India has also been one of those stocks which has been trading at lifetime highs, going from strength to strength. Parthiv, is this a right time to buy Bata India? What would your assessment be?
See, I think trying to time is the most difficult art in investing also in the stock market. If I were him, I would certainly, I think, stagger my buys. No doubt, even here it is a good story over the next 3 to 5 years. We feel that Bata has, I think, done all the right moves. It's firing on all cylinders, and I think the story will stay sustained. And also, more importantly, I think this is one and only play to play the branded footwear, especially in the organized market and also in the tier 1 segment where they have a leadership position. They are innovating extremely well. So despite the higher valuation at this juncture, I think I would still advocate a buy, but I think it won't be a bad strategy to kind of have a staggering buy approach in Bata from this juncture and give it a 3 to 5 year horizon.
I want to go to Amar for a question on IDFC First Bank, but very quickly, Parthiv, I think you missed out, giving a recommendation on JK paper. Nishtha Dhingra has bought JK paper at 95. The stock is currently trading higher. 143 is the current price. Should she hold on at these levels?
I would certainly suggest a hold. I think it's one of the best paper stocks in the country, and they are doing all the right things. The cost structures are also extremely good, and I think the paper sector on the whole should do well.
Good. Amar Singh, I'm coming to you on IDFC First Bank. We've got Shalom Ranga, who's bought at levels of 49.6. Let's pull up the chart and see where it's trading. It's higher at about 56.3. He's looking at holding for more than a year. I hope that you'll be able to give him some levels to watch for. Amar, are you with us? All right. In the meanwhile, let me go to Parthiv. Parthiv, IDFC First Bank bought at levels of 49.6. The stock's currently at 56 or thereabouts. What's the view here? Should he accumulate? Should he hold on to what he's got so far for the next year and keep adding over the course of time?
I'm not very sure how it will move over the next 1 year, but over the course of the next 3 to 5 years, I think the guidance that the management has given Mr. Vaidyanathan, on whom we have a lot of faith, that he wants to bring this bank back to a stage where I think it will be having 15% sort of ROEs and also ROAs in the levels of 1 to 1.5%. And if that were to be the case, it won't stay at current price to book multiple of around 1.2, 1.3. I think it will certainly re-rate, and I think we have full ability in terms of how well he can manage this IDFC First Bank, the merger. So I would like to give it a 3 to 5 year horizon, and even at current juncture, one can add.
All right. Well, moving on, I believe we have time for just one more query. So I'm going to take one on IndusInd Bank. We have Nitin John on Facebook. Bibin John on Facebook, who has an 1840 call of IndusInd Bank. It's a bit far off from current market levels. So we are uncertain if but we're still early days in this series. Well, Amar, let me take this question up with you. 1840 call on IndusInd Bank likely to breach?
Yeah, I would say that he should definitely hold on to his position right now, because the short term and the intermediate term trend remains extremely positive. However, the long term trend, what we're seeing is that clearly shows that it is going to meet with some resistance. So I would suggest that he should hold on to his position only if it stays above 1700 levels, because that's a crucial zone of support. And on the upside, what we're seeing on the daily charts, that it has got a resistance around 1834, which was the high. So since the short term and the intermediate term trend remains positive, he should hold on to his position. But if he gets an opportunity, he should definitely look at exiting as well.
Okay, all right. Well, that's the view on IndusInd. On that note, thank you so much, gentlemen. Thanks, Parthiv and Amar, for helping our viewers with the questions that you did answer today. That's all we have on this edition of Ask PQ.
Remember, we're just a tweet, a post, or a call away, so keep your queries coming in, and we promise to address as many as possible through the course of our shows. For all our previous episodes, visit our YouTube channel or our website, bloombergprint.com. Up next is Power Lunch. Stay tuned. This is Bloomberg Print.